Welcome to The Explainer. Today, we're going to break down a trading strategy that's all about filtering out the noise and zeroing in on high-quality setups using something called fair value gaps. If you've ever spent any time looking at a price chart, you've seen them everywhere. These fair value gaps, or FVGs, they look like these perfect little opportunities. But trading them, man, it can feel like a total coin flip. So what's the secret? What actually separates a winning FVG trade from a losing one? Okay, so let's get right into it. Today, we're building a complete rule-based strategy literally from the ground up. We're gonna start with the main problem. Then I'll show you a super powerful filter, we'll detail the exact entry strategy, and then we'll wrap it all up with a checklist you can actually use. All right, so before we can even think about filtering for the good stuff, we need to get crystal clear on what a fair value gap actually is. What is it really telling us about what the market wants to do? Think of it like this. An FVG happens when price moves so fast and so aggressively in one direction that it just skips over some price levels. It's like a sprinter kicking up dust and leaving a gap behind them. Now, the market, being efficient, often likes to circle back later to fill that gap, to kind of finish the business at those levels. And that return trip? Well, that's our window of opportunity. But here's the real dilemma. You open up any chart on any time frame, and you will see dozens of these gaps. And if you try to trade every single one you see, well, that's a surefire way to get chopped up by the market. So this leads to the most important question. How in the world do you tell the high probability gaps apart from all the noise? And this right here brings us to the first core concept of this strategy. This is the filter that will immediately separate you from all the other traders who are just out there chasing every random pattern they see on the chart. So here it is, the crucial point. Stop trading every FVG. Instead, you filter them based on their location. Just think about it like shopping. You want to buy stuff when it's on sale, at a discount, and you want to sell things when they're really expensive, at a premium. We're going to apply that exact same simple logic to the market. And you know what? Applying this filter is way simpler than it sounds. All you need is a standard Fibonacci retracement tool. You just draw it from the start to the end of a big price move. And that 50% line, that becomes your guide. Everything above it is your premium zone, where you look for sells. Everything below it is your discount zone, where you look for buys. Simple as that. So why does this work so well? Well, it's because the market rarely just goes in a straight line. It often makes these really deep pullbacks before continuing in the main direction. By waiting patiently for the price to come down into a discount zone to buy, you're not just getting a better price. You're actually aligning yourself with the bigger players, the big fish, who are often waiting for those same deep pullbacks to get in. And that naturally sets you up for a much better risk-reward trade. Okay, let's get into the meat of it, the actual strategy. This is where we combine those high-quality FVG zones we just found with a super precise entry technique, and we're going to do it using two different time frames. The key thing here is the relationship between your higher time frame, that's where you do your analysis, and your lower time frame, which is where you actually look for your entry. So if you're a day trader, for example, you might use the 1-hour chart to figure out the big picture and then the 5-minute chart to execute. This multi-time frame approach lets you refine your entry with some incredible precision. So step 1 is all about getting the big picture right on that higher time frame. You're basically asking yourself a few simple questions. What's the overall trend? Has the price already grabbed liquidity by taking out old highs or lows? And most importantly, where is our high quality FVG hiding inside that premium or discount zone? That specific FVG becomes our main point of interest. Okay, so you've done your homework, you've been patient, and price finally reaches that high quality zone you marked out. You don't just jump in, no way. This is where the patience really pays off. You zoom into your lower time frame and you wait. You wait for the market to give you a very specific green light. And this right here is the magic. This is exactly why we call it the FVG and FVG strategy. You've got your big zone of interest from the higher time frame, right? Then you wait for a clear shift in momentum on the lower time frame. This is often called a change of character. It's basically the market waving a little flag at you, saying, hey, I think I'm done pulling back. Let's go the other way now. When that shift is confirmed by a brand new, smaller FVG, that becomes your hyper-precise entry point. Now, let's talk about a couple of real-world problems you're definitely going to run into. What happens if your entry FVG is super tiny? Well, don't just stick your stop loss right underneath it. That's asking for trouble. Give it some room to breathe below the actual market structure. On the flip side, what if the FVG is huge and your risk is just too big? Consider entering at the halfway point, the 50% mark of the FVG, to tighten up your stop and seriously improve your risk to reward. Phew, okay, I know that was a ton of information, so let's boil it all down and consolidate everything we've covered into one single actionable checklist that you can use to guide every single trade. This checklist right here, This is what takes you from subjective guessing to disciplined, repeatable execution. Every single one of these boxes has to be ticked before you even think about hitting that buy or sell button. It's your systematic guide to only taking the best setups. And look, I've got to be real with you here. It is absolutely crucial to remember this point. No strategy, I don't care how good it is going to be 100% perfect. Losing trades are just a part of the business. Real long term success doesn't come from trying to avoid losses. It comes from the consistent, disciplined application of your rules and your risk management day in and day out. And that really is the key takeaway from all of this. The goal is to shift your entire mindset. Stop looking at your charts like they're just a random collection of patterns to hunt for. Start seeing them as a place where you